A little bit earlier today, CNBC Africa's Nozipho Mbanjwa spoke to AngloGold Chief Executive Srinivasan Venkatakrishnan to unpack those quarterly numbers. Let's have a look.
Firstly, when we put the proposal for consultation to shareholders, it was very much the specifics of the proposal which required us to go to the market at that time to raise equity and for that quantum. With that completely off the table now, we've got time and flexibility to get there. If you look at our balance sheet, our net debt is around $2.9 billion. And when you look at our debt maturities, there's no imminent debt that matures around the corner. In fact, the maturities are all in 2020 for the bonds, and the banking facilities around 2019. So we've got about 4 to 5 years. Second area is we've got very good liquidity, and the covenant headroom, which is we have a single covenant, which is net debt to EBITDA, is set at 3.5 times, and we are at about 1.6, 1.7 times. So it's not that we have got external pressure to sort out the balance sheet now, but we are a conservative and prudent management team, and you would have heard our CFO Christine Ramon say that. And our intention here is to take about $1 billion off the debt over the next 3-year period and take the net debt to EBITDA to around 1.5 times. And where we see the opportunity is more positioning AngloGold to have one of the strongest balance sheet in the industries going out in time, and at the same time reduce interest charge. In that regard, we have resorted to a number of self-help measures, which is continuing the turnaround which we have been doing, rationalizing more of the costs, at the same time looking at partnership opportunities around our exploration portfolio, which is Colombia, where we have declared a new copper gold deposit in Nova Chikiro, and also Abuasi in terms of partnership. And if we have to sell or joint venture an operating asset, that's something we will look at. 2
quick questions. In terms of sales, what would be key considerations before you release those assets? And then in terms of the joint ventures, can you give us an indication of the appetite that you've had in this regard?
Okay, let me answer the second question first, and then I'll come to the first. Quite a lot of appetite, a lot of reverse inquiries where the phone calls have actually come in our favor, asking for interest in terms of number of assets. I don't want to go through specifics, it's across the range. And secondly, in terms of criteria, I can tell you one criteria which we will need to ensure doesn't happen is the shop isn't open for bargain hunters. If people just want to pick bargains for the bottom of the cycle, not available, any assets we choose would be those which have got potential and those where we believe we can partner with it, have got long turnaround ability, leverage to the gold price, and importantly, highly competitive tension around those assets. And where we really want to look at is sacrificing a small portion of your production, if it means can bring in a lot of cash to deleverage the balance sheet, will get first priority.
Let's look at some of the restructuring on the South African front, more around the services as you've indicated earlier. In terms of quantifying the benefit that you're likely to realize from that, can you give us a target or a figure?
Now, we don't like to give targets until we are absolutely sure in terms of what they would be, and you notice that for the last 2 years we've been under-promising and over-delivering. So in terms of targets, we've got numbers in mind, but what we don't want to do is to put those numbers out in the public domain at this stage. But certainly you heard our Chief Operating Officer say every year he's got about 8% or 9% coming through as inflation, and his objective is to ensure that he pulls it back.
Well, you've touched on one of the pressure points, those inflationary pressures we've seen that you're experiencing in some of the countries where you operate in. Let's take that as the first part of the question, and then let's look at the pressures of a falling gold price dropping to the high 1100s last week. How are you taking that on, and what does this mean for your outlook?
In terms of the pressures on inflation, absolutely right, they come through, and the pressures come through in respect of labor demands. It does come through in terms of electricity and power generation. Recently, fuel has actually pulled back. Until 2-3 months ago, that was north of $100 a barrel. So our approach here is, how do you actually go about? You fully realize that the inflation is like an escalator going up, and there's only one escalator, and you're trying to run down that escalator. So you've got to run 2 times as fast to get to the bottom, and that's really the approach, and we have followed that. And here you've got to set the example by getting your overhead structure lean and mean. It's very difficult to get the operators motivated to say cut your costs.